In light of the Middle Eastern tensions and the rising oil price, do you think that we're going to see oil exploration ground to a halt because it's just going to become too expensive?
The difference, I think, in exploration will be between the high-cost explorers and the low-cost. If oil prices dive even lower as Iran is able to produce more perhaps from these nuclear talks, or even if it doesn't, we're still in this environment of very low oil prices. And so these low-cost producers, I think, are going to maintain their production, so the likes of Saudi Arabia specifically. But some of the higher-cost producers, particularly in the US, but also in the likes of Russia, where we're talking closer to $80, $90 per oil just to break even.
Sustainable, right?
Exactly. And I guess what really is building on this Middle Eastern tension is the fact that Iran is actually marginally a higher cost producer than the Saudis and have more reliance on oil in terms of their budgets in the region, particularly being closed down by these sanctions. So I think Iran are holding a bit of a grudge against Saudi Arabia, even specifically relating to their role in OPEC of holding down oil prices.
For investors who really hinge their own portfolios on oil exploration, tell me, how are they reacting to this eventuality?
Well, I think it sort of boils down to the nature of the explorers that you're investing into. If you're exploring on the exploration side, you've got to look at the region. And I think given the number of reduction in the number of rigs in the US, that is becoming an increasingly high-risk play, especially given a lot of these companies quite highly leveraged. So if oil prices do remain low, they're just not going to break even and they have debts to pay, and that results in bankruptcies or consolidation in the industry. So I suppose the one uplift is if you do find the stronger players in these kind of higher cost producing areas, M&A could be your one bright spot, but otherwise it could be quite bleak.